Six men, a private island, fake names, and a plan to control all American money. It is not a conspiracy theory. It is on the Federal Reserve's own website. By the end of this video, you will know exactly who created, who owned it, and the one things they have never wanted public. Stay with me. It is November 1910. Six men board a private railroad car in New Jersey. They use only first names, no titles, no last names, because if anyone on that train recognized them, the plan was over. Between them, roughly a quarter of the world's entire wealth. Their destination? Jekyll Island, a private resort owned by JP Morgan, described by Menzies magazine as, quote, the most richest, the most exclusive, and the most inaccessible club in the world. This is on the Federal Reserve's own website. They hid the meeting for 20 years. And why the secrecy? Because they knew exactly what they were doing. Frank Vanderlip, the Citibank president, wrote this in his 1935 autobiography. They admitted it themselves. Their first attempt failed because it had Aldrich's name on it, and everyone knew Aldrich was a Wall Street man. So they renamed it, repackaged it, called it Federal Reserve Act instead of a Central Bank Act. And on December 23, 1913, 3 days before Christmas, with Congress mostly empty, Woodrow Wilson signed it into law. The law those six men wrote on a private island still governs the US economy today. And here is what is wild. The US had two central banks before this one. Both were abolished because the public revolt. The third time, they hid who wrote it. And it worked. Here is where it gets genuinely strange. The Federal Reserve isn't a government agency, but it is not a private company either. 5 layers. At the top, Congress. They created the Fed and can legally abolish it tomorrow. Below that, the Board of Governors. 7 people appointed by the President, confirmed by the Senate, serving 14-year terms. So no single president can stack the board. Then, FOMC. 12 people who actually set your interest rate. They meet in a closed room 8 times a year, and at the bottom 12 regional Federal Reserve Bank, which are technically privately owned. Every time you see this headline, that is FOMC, 12 people in a room, just change your mortgage. A Freedom of Information Act request forced the New York Fed to reveal its shareholders. Citibank owned 42.8%, JP Morgan Chase owned 29%. 2 banks, nearly 3/4 of the most powerful regional Fed in the country. And this is where the most people get it wrong. Owning Fed shares is nothing like owning Apple stock. You can't sell them, you can trade them, you can use them as collateral. Each bank, no matter how many shares they own, get exactly 1 vote. Citibank with 42% get the same vote as a tiny community bank in Kansas. The Richmond Fed explained this themselves. The shares are more likely a membership fee than actual ownership. So, who really controls the Fed? Honestly, nobody fully does. Congress has ultimate power, but almost never use it. The president appoints governors, but can't fire them. Banks own the regional Fed, but can direct them. And voters, they have zero direct influence. Okay, now you know what the Fed is and who regularly own it. Let's talk about what it actually does, because this is where it stops being abstract and start affecting to your real life. The Fed has 2 main tools. Think of them as 2 dials. The Fed doesn't print paper money. That is the Treasury job. What the Fed does is create digital dollars. Out of nothing, it buys Treasury bond from bank and pays with money they didn't exist 5 minutes ago. Banks now have more to lend, more money chasing the same goods. Inflation. This is the Federal Reserve's own data. Look what happened in 2020. Worst inflation in 40 years. The federal funds rate, this single number determines your mortgage, your car loan, your credit card, your business loan, everything. When the Fed raised from 0 to 5.2 in 18 months, mortgage rates went from 3 to 7%. It's same house, same person, almost $1,000 more every single month because 12 people in a room decide to turn the dial. And CNBC confirmed the most aggressive rate hike cycle since the 1980s. The housing market froze. People who planned around 3% rates couldn't sell, couldn't buy, couldn't move. Yeah, you are right. Independence means the Fed can make unpopular decisions, like raising rates during an election year, that politicians would never do. That protects you from short-term political thinking. But independence also means zero democratic accountability. The people who set your mortgage rate, you never vote for them. You can't vote them out. And if they get it wrong, like they did in 2020, there is no recourse. They apologize at the press conference and move on. Both things are true at the same time. In 1977, Congress gave the Fed what is called dual mandate. Two goals, simple on paper, impossible in practice. When unemployment is low and everyone has a job, wages go up, people spend more, inflation rises. To fight inflation, the Fed raises rates. To fight inflation, the Fed raises rates. Higher rates slow the economy. Businesses stop hiring, people lose jobs, and round we go. It is like being asked to push a car forward while keeping it from rolling downhill. At the same time, forever. Powell talks about this at every single press conference. And right now, in 2026, the Fed is facing the hardest version of this in decades. The Fed's own March 2026 minutes. The Iran war spiked energy prices, pushing inflation higher. Cutting rates would make it worse. So they held at 3.5 to 3.75, trapped. The last time they got it wrong, 2021 and 2022, they kept the rates at 0 too long. Then raised it the fastest in 40 years. Mortgage rates doubled. The housing market froze. Millions of ordinary lives changed. And nobody at the Fed lost their job over it. Here is a question I keep coming back to when I research this. Should the Federal Reserve exist at all? Bernanke, the actual Fed chairman, admitted tight monetary policy made the Great Depression worse. Fed easy money cost 2008. COVID printing gave us 9.1% inflation. 3 disasters with the Fed's fingerprints. The case for without the Fed, in 2008 the banking system might have collapsed entirely. Your savings, your checking account potentially gone. That intervention probably saved modern finance. 2008 without Fed could have been much more worse. Because it is politically convenient to leave it alone. Think about it from a politician perspective. The Fed makes the unpopular decision, raising rates, slowing the economy, and takes the blame. The politician criticizes the Fed publicly while privately being relieved someone else made the call. Perfect for a politician, terrible for accountability. Congress hold hearings, ask hard questions, look tough on camera, and then leaves the Fed exactly as it was, every single time. So here is what you now know the most people don't. The Fed was created in secret. By the people it was supposed to regulate, on a private island. In 1910, it is not a government agency. It is not a private company. Citibank and JP Morgan own share in it, but that ownership gives them almost no real power. 12 people who you never vote for set your mortgage rate, your savings interest, and whether your employer is hiring or laying off. If you like the video, leave me a like and subscribe so you don't miss the next video.